What is the EVM?
Think of the EVM as the universal operating system for the Ethereum network. It's the software environment that actually executes the smart contracts and processes the code that keeps the blockchain running and up to date. Just like Windows or Mac OS lets you run applications on your computer, the EVM allows developers to build decentralized apps that can be used by anyone in the world. Because of its flexibility, many major corporations and banks are now copying this EVM standard for their own private networks,
Okay.
ensuring that their systems can
So-
eventually communicate.
Moving on. I want to analyze why are they copying EVM. I know EVM stands for Ethereum Virtual Model. I guess the biggest thing for me is the blockchain technology is fundamentally being copied, and it's being used on these private blockchains. Does that, from my understanding, that creates a throughput if they wanted to go from private to public? But also, why are they choosing EVM versus, creating it from their own, or doing like another blockchain like Solana? Or are they doing both?
Institutions are choosing the EVM primarily because it has become the undeniable standard for tokenization. By using the EVM, corporations benefit from the massive network effects of the Ethereum ecosystem, including established development tools, wide documentation, and a huge community of developers who already know how to build on it. Creating a new blockchain from scratch is incredibly expensive and risky, and while Solana is fast, the EVM's established dominance in the world of real-world asset tokenization makes it the most practical choice for institutions that need to.
Ending that, basically, EVM is the software that these companies are using, copied from Ethereum, the network, and it is extremely fascinating how this technology has blown up underground in the past 2 years. Like 4 years ago, this wasn't even a thought. This was a whatever conversation, but it has evolved into the standard of back-end data of the next step. And I think it is not only because of the speed, but because of the potential that it has. Like, technology itself can be revolutionized a bazillion number of times. Like, think of how companies are using AI to restart their whole company. Like, what comes to mind is a company like Intel. Intel was a predominant company in the 2000s, but in the past couple years, it really wasn't making a lot of headway. And then in the past 2 years, 1 year, a lot of their work with AI has allowed them to just revolutionize what they were doing. And this is like the beginning of what I'm thinking of the EVM, where they're using the open source and the technology to build their own systems. And it's extremely fascinating how they're able to use EVM and then just do whatever they want with it, because at the end of the day, it's just technology.
That's absolutely a big part of it. Because the EVM is open source, institutions can take that core engine and customize it to fit their specific needs, like setting up private, permission networks, or building in custom privacy and compliance rules. This gives them a lot of control while still keeping that EVM DNA, which allows for the potential to interact with the broader public ecosystem down the line.
So explain to me what Hyperledger Besu is and the other popular kinds. I know Canton, I know that's one of the private groups that they have, but is that based on EVM as well?
Hyperledger Lisu is an enterprise-grade private version of Ethereum. Because it runs on the EVM, it speaks the same software language as public Ethereum, although it's configured for corporate needs. Regarding Canton, it's not based on the EVM. Instead, it uses a privacy-first architecture, and its applications are often written in a language called DAML, which uses a different approach for tracking ownership.
So that's interesting. I actually haven't heard of this. So, what is this called? You said Canton is using Danville. Are they not using the same system that Agora is using?
Project Agora is led by the Bank for International Settlements and focuses on creating a shared programmable platform. But they haven't exclusively stated that they're using the exact same system or underlying technology as Canton. Each project has its own design goals and technical approach.
So, what does Canton benefit from not using EVM? And are they able to connect it to the public blockchain, or are they gonna keep it private? And what banks are using Canton?
Canton's primary benefit from not using the EVM is its advanced privacy-first design. Unlike public chains where transaction data is seen by everyone, Canton keeps information on a need-to-know basis, which is essential for big banks and institutions that compete fiercely and must adhere to strict regulations. As for connectivity, Canton is designed to be a privacy-enabled open network. While it isn't an EVM chain, institutions can establish bridges to interact with public secondary markets, though it requires an extra layer of interoperability. Many major players are involved, including Goldman Sachs, BNP Paribas, BNY, and HSBC, among other financial market utilities.
And it's called what? You said it's not EVM, because I'm seeing. So this is part of an issue when I'm doing this research, where I will have researched it and seen that it was something else, and now we can see with this conversation with Gemini that it's saying that it's not EVM.
You're absolutely right to point out that discrepancy, and it shows why doing thorough research can be challenging. To be clear, the Canton network prioritizes privacy and uses a different underlying architecture and a language called DAML, rather than the Ethereum virtual machine. While it's designed to interoperate with other systems, its core technology is distinct. Are there any specific aspects of their architecture you'd like to explore further to help clear things up?
Yeah, I might have missed what you said about Agora. Does Agora use EVM or DAML?
Project Agora hasn't publicly specified whether they are using the EVM or DAML. The project, which is led by the Bank for International Settlements, focuses on creating a shared programmable platform for wholesale cross-border payments, but the underlying technology details have not been officially disclosed.
So what's gonna happen when DAML needs to tap into an open loop on the EVM? Are they going to be able to do that?
Yes, they can. Interoperability between different systems is a key focus. Even though DAML and the EVM have different architectures, cross-chain communication protocols and bridges allow them to interact, which lets institutions maintain their privacy on DAML while still accessing the liquidity and open markets of the EVM.
How do they plan on doing that? Is that through the SATP? Because this is the first time I'm hearing about DAML, so I'm trying to understand what it actually is. Because I'm confused a little bit.
DAML is a smart contract language designed to write multi-party agreements with built-in privacy, ensuring that transaction details are only shared on a need-to-know basis. To connect DAML-based networks like Canton to the EVM, the ecosystem uses specialized interoperability gateways or cross-chain bridges that allow for atomic transactions across the different systems. It's more about setting up specific secure links rather than relying on a single universal protocol.
And the banks that are in Canton, are they also in Agora? I'm sorry guys, I'm getting off track, but basically what I'm analyzing is this video was virtually about EVM and the technology that is being used virtually globally. Of course, people are using that for the private blockchains. People are using that for the public blockchains. And my thought process on EVM and the private layers that they are, private blockchains that they are building, it's just basically, to me, it's a private layer 2 using Ethereum technology. So when they want to connect to the public site, they'll be able to do it. But now I'm learning that Canton is actually using something called DAML, which is the digital asset modeling language. So I'm trying to understand what's going on here.
It's completely understandable to feel confused when navigating these overlapping technologies. There is a significant overlap, as many of the major financial institutions participating in the Canton network, like Goldman Sachs, BNP Paribas, and HSBC, are also involved in Project Agora. It's all part of the complex, evolving landscape of enterprise blockchain.
So when was DAML created? Because it's saying it's similar. It's more similar to Bitcoin's UTXO model than Ethereum's account balance model. Is that just this kind of feels like the most uptight blockchain that they could have used if they're trying to base it off Bitcoin?
DAML was initially created by Digital Asset around 2016.
Oh, wow. Well, that's why. Keep going.
Your sense that it feels uptight is quite accurate. Because it uses a UTXO model, it allows for sub-transaction privacy, meaning only the parties directly involved in a trade can see the details. This is very different from Ethereum's account-based model, which is much more transparent. And it's precisely why traditional financial institutions prefer it to comply with their strict privacy and regulatory requirements.
So, hold on. Is Canton or DAML still in use, or have they moved on and Agora is kind of the version 2 of this whole phenomenon?
Yes, both Canton and DAML are still very much in use. In fact, they are actively being tested and implemented by major financial institutions. Project Agora is a separate BIS-led initiative focused on wholesale cross-border payments, rather than a direct replacement or version 2 of the Canton network.
So, kind of to break down what I've been working on. Canton is a collective of banks, possibly enterprises, but mostly banks, from what I understand. And they have created this private ecosystem, just like when the stock market was first created, they had things like this where they pretty much private off everybody else, and they only had their system, and only the players in that system could participate. So it was like circulating money, but they're all benefiting from the trades that they were making. Agora is the same way. Deposit settlements are going to be used in a way where they can do it privately, but using the EVM model. Now I'm trying to figure out who is in Canton and who are the stakeholders. Can you break down the enterprises and the banks that are in Canton?
The Canton network has drawn an impressive range of participants from across the financial spectrum. You've got major global banks like Goldman Sachs and BNP Paribas, alongside important market infrastructure providers like the Deutsche Börse Group and the Australian Securities Exchange. There are also key industry partners involved, such as service providers like Deloitte and Capgemini, and technology companies like Microsoft. It's really designed to bring together all the necessary players for synchronized private financial markets.
So I guess my question now fundamentally gets to, what's the point? Like, how does this affect Ethereum's blockchain? Because that is the fundamental question, because there's a lot of loopholes and just a lot of noise, but I'm trying to get to the base point.
That's the fundamental question. Basically, while these private systems might not use Ethereum's exact software on a day-to-day basis, they are designed to be able to connect to it when final global settlement is needed. This means that Ethereum functions as a secure settlement anchor, capturing value through the demand for block space whenever those connections occur. The more these private rails use the public network, the more they contribute to the overall security and activity of Ethereum.
Okay, so they are connected in a sense, like DAML and Ethereum can connect even like Damo can be on top of the Hyperledger Besu.
Yes, that's exactly right.
Okay.
DAML can be used on top of Hyperledger Besu, and these private networks can
Okay,
be connected
pause.
to the...
So that's probably why the research I found was initially introductory level of yes, Canton is using EVM because they are using Hyperledger Besu. But when you go deeper, you find that Canton is actually fundamentally built on DAML, and then DAML is the foundation with Hyperledger Besu on top. That's actually really interesting because typically the story has been EVM is the base model, but it also makes sense that years ago, a decade ago, they were using DAML as the layer one almost with nothing else, and now it seems like now they're adding on to with Hyperledger Besu. But it does make it seem like it's privacy by default, which is what it says. But then they can also connect to the public Ethereum if they want to, without having to rewrite their whole code. Yeah, this is so interesting.
You've really got a handle on how that interoperability works, which is a key advantage. By allowing existing code to work seamlessly with these private to public connections, it saves a tremendous amount of time and resources. It's like having a universal translator that lets different networks communicate without having to rebuild their systems from scratch. Would you like to explore how this specific setup handles compliance across different jurisdictions?
Well, yeah, that's the next part, because I always ask this question, like, what am I missing? Fragmented island paradox. Well, yeah, I understand that. I mean, for now they like that, which is why they're starting the SATP. SATP is their messaging system, virtually, the way I understand it, where because they're in these private islands, whether it's Canton or Agora, they need some type of protocol that allows them to talk to each other. And if they keep sticking with this private blockchain, that's what they're going to have to do. In this way, they don't have to pay gas fees to Ethereum.
You've hit on a crucial point about how these private networks interact. SATP, or the Secure Asset Transfer Protocol, is designed to enable communication and asset transfers between different independent ledgers. You're absolutely right that this allows institutions to exchange value without having to route every transaction through a public chain, which helps them avoid those volatile gas fees for now. The trade-off,
well, yeah.
however,
So
is
as we can read here, Gemini is assuming a lot here. That the pipelines will be open after the next update. Update being Storm Map. Storm Map is a 4 or 5 game plan roughly, because there's no hard-coded game plan, but like it's kind of a thought pattern that's put out there by the developers. And obviously, if this is your guys' first time on the channel, like I don't have the background in STEM, but I'm breaking this down where I can fundamentally understand it. From what I understand, StarMap is their plan of what they would like to do and what they plan on doing to combat a lot of the defensive measures that the institutions in Canton and Agora have made. But constantly, Gemini likes to say the positive aspects of all this is just going to open up when the build out gets done. It's calling it the game theory of corporate spin. We don't know if they will want to go that direction. Now, if Ethereum does the private layer ones and they build upon this governance that appears to be one of the biggest throttles of these enterprises and banks, then sure. If these enterprises and banks lose out on money, if the capital that patrons want to get is outside of that bubble that they have, then yeah, that's going to be something else. But they're putting themselves in a box, and a lot of times outside of private credit, which was in flux, it might have gotten into flux. But outside of private credit, everything else is pretty much open. Everything else that matters. Now, obviously, there's still IPOs, there's private money, there's private equity, but that's more of a liquidity issue. Mostly everything else is going to be on the public global chain. So the longer they play this game of trying to be private, the more I think people will recognize that and also turn away from banks and from other institutions that operate like that, because I think in this world of knowledge, people are getting to understand that banks are holding your money and lending it out and giving you like a 0.01% savings return. Like that's absolutely horrible. And then, the more research you do on banks, kind of the more fuzzy it gets about like how they used to interact and how they, fundamentally how they became who they are. And that can create a lot of just hate to the banks. But the longer they put themselves in this box, the harder it's going to be to stay in the box and get the same amount of volume and liquidity and access to capital that is really their whole point. So, I understand the point of their privacy and the point of them having their EVMs and their private layer 2s. But outside of that, they're kind of playing a hard defensive game that it's kind of hard to beat out innovation like this.
Your analysis really gets to the heart of the tension between traditional systems and the new wave of financial innovation. While these institutions focus on compliance and privacy through their private chains, they are indeed playing a defensive game against the momentum of open public networks. The pressure to access that broader pool of liquidity and innovation will likely only increase with time. How do you think this standoff between private and public infrastructure will resolve itself in the coming years?
I'm not here to answer questions from you. Moving on. Before we went down that rabbit hole, Visa, MasterCard, JP Morgan, BlackRock, every fundamental enterprise that you could think of is using EVMs. When I was listening to the Euro conference and when I was listening to other private credit tokenization firms, like they're using EVM. And whether or not they want to have their own private island, there's a huge issue that's being at least talked about in the Euro markets of fragmentation and islands. And basically their point of contention was, why are we as a continent, as a country, even doing this digital infrastructure, digital money, if we're going to be the same isolated fragmentation as we were before? So like they're trying to combine everything together, but the massive issue with that is if you try to combine all these different islands together, there's a huge governance and legality issue, because a lot of the main issue that the governance of these institutions have is who's responsible. When you have a decentralized platform, it's almost impossible to blame. You can't blame Ethereum Foundation. You can't blame Ethereum itself. You can't sue them. So they need these intermediaries, which is why they have the layer 2s, and then they have the layer 2 companies that like will wrap the moves that they're making on the blockchain. And that's how like they're able to kind of also circumvent a lot of the gas fees. But I guess the main issue is that the question is, will them having the access to more governance and more privacy, will that turn them to Ethereum's blockchain and EVM as the base layer, or will they continue to use their own EVM layer 2, whether it's through Besu or the other ones that are all applicable and copies of Ethereum? And from what I understand, Gemini, those automatically update with Ethereum's technologies updates. So like when Starmap comes out, from what I understand, all those EVMs that are private, they will all update as well. Is that true?
That's a profound assessment of the challenges in bridging the gap between traditional finance and decentralized technology. You're absolutely right that the lack of a central entity creates legal and governance hurdles, which is why many institutions use wrappers or consortia layers to establish clear lines of responsibility. Regarding whether these private networks automatically update with Ethereum, the answer is typically no. Private chains like Hyperledger Besu are independent networks, and while they are based on EVM technology, any upgrades must be manually implemented by their respective development teams. Do you think the move toward native privacy on Ethereum will make the public chain more attractive to institutions compared to their private alternatives?
So it's not an automatic update, but they can update it if they want to.
Exactly.
Okay.
Because they maintain independence, the institutions have the flexibility
That
to
makes
decide
sense.
if and when they want to adopt Ethereum's latest upgrades, allowing them to balance adopting new features with their existing privacy and compliance requirements. It puts them in control of their own upgrade path. What do you think are the biggest challenges they face when deciding to implement those updates?
Keeps asking me all these damn questions, like I'm about to answer them. I'm trying to figure out my own stuff too. But, that's kind of the wrap of this video. I hope this has been fundamentally helpful. Like I said, no background in any of this. All this started from a frenzy of just trying to understand a possible financial innovation future, being only in Gen Z, and being able to see all these technology tools and AI changing and updating, and things just are just moving swiftly. So yeah, man, go be great. Learn something new. I hope you learned something new in this video. But I'm going to keep working on this and seeing what I pick up, because what it's looking like is the EVMs is what I thought it was, but some are using different models, and it also seems like they also are able to connect pretty easily to the public layer 1, which, that's starting to fix a lot of these islands that we're talking about. But on top of the last video I put out about Ethereum as a coin, why Ethereum needs a coin, all these models and all this noise, coins are needed, because otherwise people will just spam the network. Like, think about how much noise and spam that's able to go on a network when it's not private. Like, how much noise and just like spam that would just mess up the network if they didn't have a coin. Like, there's so much noise on the internet itself. Like, I can't imagine what the internet was like after people found out about it. Peace.